Yo, what's up, guys? Doing the update. I want to just talk about today. Equities were down pretty good, so just do a little recap of what we did, kind of what we're thinking in tomorrow. The Avs looked good last night, so Game 7, baby. The playoff beard is working. Hopefully, I don't have to shave it till August. Is that when the Stanley Cup's over? August? Maybe July. Anyway, let me get my ugly mug out of here. Okay. I think I'm going to do a post, or I did an email on. It's tough to know when you're going to see these, obviously to predict when the volatility is going to break out. But if you just stick with the cycles and then you always kind of want to have, you guys that are in the coaching, I talk about pouring 2 glasses of water. If you're long and short, if you get 2 glasses half full, you're kind of pouring water from one cup to the other. And so as the market gets to the top of the range and the bottom of the range, you want to add into our shorts. We want to cover stuff and then obviously get a little bit more long on pullbacks on the things we like. So there's a balance there between, well, okay, what do I short? What do I want to be long? You got to know what to do there. Am I just buying Apple and am I trying to short Tesla? Not really a great correlation, right? Because you can have both down, they're both in equity. But if you start with equities, the Dow, S&P, so even inside of U.S. equities, you can say, well, maybe I like the Nasdaq, but I don't like the Dow. Maybe I like the Russell, but I don't like the Russell, but maybe I like the Nasdaq. But typically, those are going to trade together. We know that sometimes there's a little bit of some outperformance one way or the other. But if you go long equities, the other side of that could be long treasuries. Typically, right, stocks go down, bonds go up, or the flight to quality trade, which is treasuries. That's my background. And so within treasuries, we even do long short treasuries. So we're short 5s and long 10s, right? Being long the VIX is another way to hedge if you're long S&Ps. And so there's a balance. There's an art to the size of how you work positions. There's an art to how you kind of balance your portfolio. But I don't, you don't want to just be one-dimensional. I mean, I remember I used to think that was how you trade. I'm gonna just trade S&Ps and oil, and I'm trying to pick long or short every day, flip-flopping from one day to the next. If you're especially if you're gonna position trade, much better to go with some global macro trends. Go with what you think about, have an opinion about. Is growth accelerating, decelerating? What's inflation doing? The dollar, blah, blah, blah. All right, so real quick today, we came in, I didn't do anything in outright VIX futures, but we've done a pretty good job signaling, because these are some of our last buy signals in April, beginning of April, right? And this is typical of when you turn the corner. We could do this on anything that's bottoming. When gold was bottoming, this could be over a weekly, daily and weekly chart where you're buying along the bottom. We did that on Cardano. All right, so it's multiple entries and then usually multiple exits. So we were buying calls. We were buying 14 strike calls, and I had some 17 strike calls today. So we were buying the upside calls, and then when we go from 12 to the top of the range, 14, we take profits. This was an overnight move. You weren't really able to sell there, but that on the open, we took some profit today. Same thing. And then on the other side of that, we've been playing long S&Ps. I've been long S&Ps for all of this. We haven't been shorting. We've only been shorting the Russell against the S&P long, right? So today, you guys can see, let me try to draw here. I got to pick up that drawing tool from the library in the morning. For somebody that may not know, we've got a brand new live trading room. I don't hate to wait for the end of the video to talk about it. I'm going to put a link where you can put in your email. It's free access. I'm going to give people free access for a week. So put your name in. Click the link in this description. Put your name in, your email. I will send you instructions on how to get into our live room. All right, and then some of you that have already paid, you're the real-time alerts, or you're part of the live room. I'll help you get in there. You can message me in River. You guys know what to do there. But we've been slowly, gradually moving over to that for anybody that wants to be a part of the live room. It's only going to be $100 a month. Before, just our real-time alerts, we didn't have push notifications. It was all chat-based. The live room was $200 a month, where we did the Zoom room and we traded live together every single day. Actually, we used to do the live room only Tuesdays and Thursdays for a couple hours. So that was part of the coaching program, which was $5,000, and you got access to that. So for $100 a month, this is the best real-time alerts professional trading room platform, and it's something that I was excited to put together. I think it's just way more professional into how we want to do it. So anyway, look out for that. I also pinned the tweet on my Twitter at the Jason Jenkins. Okay, so a couple things. These regression lines, there's a couple of them here. I like to draw the inside range darker, and then when you widen out, there's more opportunity when you widen out standard deviation from the mean. So you can kind of see there's a dark line here in the middle. That's the mean. This is one standard deviation here. This is two standard deviations. And then like the Russell, we were actually pushing up against 3 standard deviations yesterday and the day before. That would be somewhere down here. All right, so that's not support and resistance. It's an area. But markets have a hard time. You can look at the 3 sigma rule. You can look that up on the internet. In statistics, it's very difficult to stay outside of 3 standard deviations. Most of the price action will fall inside of that. A lot of the algos, a lot of smart computers, machines, they use a lot of standard deviation. All right, so today we were down here. We were getting pretty oversold at the bottom of the range. And that's part of the reason why I added. I bought 78, and I did, when we're down here trading 60-something, I bought some calls at 28.90. And then I took those off on this little bounce we had at the end of the day. So, but overall, guys, directionally the market's oversold, but it's still bullish. So we want to be a buyer back here towards pi. So everybody else is freaking out when VIX is up to 21. That's an opportunity to take it on the long side. All right, growth isn't slowing. We're not in what some of you understand what quad 4 is. That's what we had at the end of last year. Now we're more in the Fed's pivoted dovish, and we've got inflation accelerating. We do have growth still slowing, but it's not at the same pace as when we came off the top of the highs from September, October of last year. All right, that's what I want to say about S&Ps. The Russell, we had some puts on the Russell. Actually, let me show you guys something. On S&Ps, we had a really nice call here. I kind of like to poke fun at old Wall Street all the time that they can't pick tops. They tell you can't pick tops and bottoms. Well, we bought our puts and we issued this sell signal right on the high from the move from Monday, or was it Friday? I'm getting everything confused. This was Friday, right? This is Sunday night. Yeah, this was Monday. All right, so that was just timing it up with the cycle, and then also looking for a lower high relative to here after a lower low. So that was the area where it made sense to just put a little bit out. Bought those puts. Those worked out pretty nice. We can actually realize those on the open that evening, the Asia Open, and then I covered some futures. Oh, sorry, this is me getting long another lot. We took some longs off here at 12.5. So still playing a core long. Bought some calls here on this dip. We took off our 28.30 puts from the highs. Russell, small cap, we were starting to get not nervous, but you had to be a little wary here of the market trading above 1600. We actually had kind of 2 false breakouts, but we haven't been able to close the week. Actually, this Friday was a weekly close above 1600, so that's pretty rough. I mean, we thought one day, 1 week doesn't make a trend. So 1600 and needed to see some more follow through, and the market struggled to do that. So we've been playing this on the short side for other reasons I don't really feel like getting into right now. But I covered my all of those futures here about midway. My regression channels got erased on accident today, but this is 1 standard deviation. 2 and 3 was up here around 1625. But anyway, so we were back in the middle of the range. I covered all my futures, and then after the bounce into the close, I just shorted just a 1 lot to kind of balance out my long in S&P and just kind of tighten up the book a little bit. But I want to be a seller again if we get close to 1600. I'll run the regression tomorrow, but it's probably the highs is a little bit closer to like 1610. All right, and then we were long treasuries. We like treasuries in this environment. I booked some gains in another account in 10s. I stayed long on this book, which was fine. I don't know if we sold any 5s. I did sell a couple 5s against my 10-year long in the strength. I'll cover those back down here at like 15, 16, 17 down here where pi is. So where they were playing, again, it's kind of a flattener, but we're staying core long treasuries and bullish. But instead of just coming out of all your 10-year position, you can sell other parts of the treasury market against that position as kind of a hedge. And then we trade around both of them, trade both of those off each other. It's a good way to do it. Kind of generate a little bit of more income around some of those positions. There's one more VIX. No, I think that's pretty much it. Yeah, I just encourage you guys, click the link in this description or go to my Twitter at VJ